Thank you very much for taking time out of your busy schedule and joining the conference call today. We are now starting the CIMIC Holdings first quarter 2023 financial results presentation meeting. Today, our CFO Wataru Mochizuki will explain the financial results overview. We are scheduled to end at 4:45 p.m. after the Q&A session. The video recording of this call will be posted later on CIMIC's IR webpage and be available to view on demand. Now, our CFO Wataru Mochizuki will explain an overview of financial results. Hello, I am Mochizuki. I will be giving an overview of financial results for the first quarter of the fiscal year ending September 30, 2023. The following is a description of our group's business activities. CIMIC Group is spanning our business across our pharmaceutical solutions in which we support the development and manufacturing activities of pharmaceutical companies, as well as our healthcare solutions to provide services to medical institutions, healthcare professionals, local governments and individuals. In addition to promoting drug development and digitalization based on new drug discovery platform technologies, CIMIC is expanding its business domain into the healthcare field and promoting business that contribute to total disease care initiatives, from prevention to diagnosis, treatment, and prognosis. This table shows CIMIC Group sites. As of December 31, 2022, the CIMIC Group consists of 27 companies, including CIMIC Holdings, the holding company, and 24 consolidated subsidiaries, and one equity method affiliated company, 13 of which are overseas, and has 62 sites, including plants and laboratories, in Japan and overseas. In a fiscal year ending September 30, 2023, the second year of the midterm plan from 2022 to 2025, we will steadily implement measures to address each of these pillars in order to achieve our goals. First, let me talk about our progress toward advancement in a healthcare business. We have continued from the previous fiscal year to provide comprehensive efforts, ranging from disease prevention to follow-up services, including COVID vaccination and PCR test support services, along with the follow-up of infected patients. As an initiative to strengthen our digital platforms, with the aim of increasing the health value of individuals, CIMIC has entered into a capital and business alliance agreement with Knock on a Door Incorporated and has acquired it as a subsidiary. Knock on a Door is currently focusing on Nanakara, a platform that enables epilepsy patients and their families to share and manage daily records such as seizure frequency and medication status. In the future, Knock on a Door plans to expand its service with Nanakara as the basis to other diseases, aiming to provide a wide range of patient-centered services. We also expect to create synergies with existing businesses, such as collaboration with Harmo and utilization in clinical trials. With regard to strengthening comprehensive support for disease prevention and treatment, from R&D to sales, we have established our new consulting and navigation unit to strengthen support for overseas bio-venture companies entering the Japanese market, as well as for companies from other industries entering the healthcare space to better support the diverse needs of our customers. In addition, Orphan Pacific has commenced the development of glycerol phenylbutyrate, Ravicti, in Japan for the treatment of urea cycle disorders. Regarding contribution to a sustainable society, as a company involved in a business of supporting people's life and health, the CIMIC Group places a high priority on ethics and science, and is proactively developing human resources who can play an active role in these areas and providing opportunities for them to do so. Also, as ongoing social contribution activities, we co-sponsored the International Children's Drawing Contest, awarded the 8th Society of Japan Prize, and supported athletes with disabilities. As for the International Children's Drawing Contest, we received an Award of Excellence in the Missinat Awards 2022. This is an overview of consolidated income statement. Sales in the first quarter of fiscal year were 29,677 million yen, which was up 20.5% year-on-year by 5,048 million yen. Operating income was 4,270 million yen, which was up 26.5% year-on-year by 894 million yen. Ordinary income was 3,401 million yen, which was down 1.7% year-on-year by 60 million yen. Profit attributable to owners of parent was 1,950 million yen, which was down 7.4% year-on-year by 156 million yen. Earnings per share were 111 yen and 73 cents. As for profit and loss below operating income for the quarter, non-operating income, such as subsidy income, totaled 32 million yen, and non-operating expenses, such as foreign exchange losses, totaled 901 million yen. Regarding foreign exchange losses, a significant foreign exchange gain was recorded in a previous fiscal year on loans to group companies denominated in foreign currencies, but a foreign exchange loss was recorded in the first quarter of the current fiscal year due to the appreciation of the Japanese yen. No extraordinary income was recorded, and extraordinary losses of 25 million yen, including loss on retirement of fixed assets, income taxes of 1,615 million yen, and net loss attributable to non-controlling interests of 91 million yen were recorded. Sales and operating income by segment are shown in a table below. Sales and operating income in both our healthcare and pharmaceutical solutions segments surpassed the record in the same period of the previous fiscal year due to substantial growth in local government support services for new coronavirus infections in a healthcare solutions segment, as well as solid performance in each of the businesses in a pharmaceutical solutions segment. Orders received and order backlog by segment are shown in a table below. Orders received increased by 34.4% compared to the same period of the previous fiscal year, and the order backlog increased by 11.7% compared to the same period of the previous fiscal year. The percentage of sales for reportable segments were 68% for pharmaceutical solutions and 32% for healthcare solutions. Growth in coronavirus infection-related business has led to an increase in the percentage of healthcare solutions. The following is a sales composition by business segment of pharmaceutical solutions. Sales grew in all businesses, reaching 20,494 million yen, up 15.6% year-on-year, and operating income also increased to 1,722 million yen, up 31.8% year-on-year. The CRO business accounted for 50.6%, the CDMO business 31.8%, and the market solutions business 17.6% of total sales. This is an overview of the pharmaceutical solutions CRO business. Our sales has increased compared to the previous fiscal year. Also, we have acquired orders for new development projects, and our operation ratio has improved, lifting our profit rate up and beyond the level of the previous fiscal year. This is an overview of the pharmaceutical solutions CDMO business. Sales increased from the previous year due to an increase in contract production volume in Japan. Likewise, our EBITDA margin and profit rate exceeded that of the same period in a previous fiscal year. Domestically, new projects expanded steadily with the need for the stable supply of pharmaceuticals. We are strengthening our sales activities in a U.S. business, while continuing to closely monitor the price trends and supply issues in energy, raw materials, and so on. This is an overview of the pharmaceutical solutions market solutions business. Sales increased from the same period of the previous fiscal year. On the other hand, our business profit margin decreased compared to the same previous in a previous fiscal year due to a surge in research and development expenses in orphan drugs. The following is a breakdown of the sales composition of the healthcare solutions business. Sales and profit have increased, with sales rising to 9,646 million yen, increased by 36.5% compared to the previous fiscal year, and operating income, rising to 2,945 million yen, increased by 23.0% compared to the previous fiscal year. The sales composition is 28.1% for the Site Support Solutions business, and 71.9% for the Healthcare Revolution business. The composition of the Healthcare Revolution business increased due to vaccination support. This is an overview of the Healthcare Solutions Site Support Solutions business. Sales fell below the same period of the previous year, due to decrease in new coronavirus vaccine and drug development projects. Likewise, profit rate has dropped. On the other hand, current orders received increased due to an influx in clinical trial projects. To expand our business domain, we are strengthening collaboration with academia in addition to medical institutions. Healthcare Solutions Healthcare Revolution Business Overview. Sales increased from the same period of the previous fiscal year, and the business profit margin was also at a high level. Support services related to coronavirus vaccination continue to expand. In addition, we are expanding business solutions that integrates disease prevention, health information and information technology. Here, I'd like to explain our consolidated balance sheet. Total assets at the end of the quarter increased 4,603 million yen from the end of the previous fiscal year to 112,193 million yen, mainly due to increases in trade receivables, intangible assets, and intangible assets. Capital expenditures for the quarter totaled 1,932 million yen. Depreciation and amortization totaled 1,227 million yen, and amortization of goodwill totaled 25 million yen. Liabilities increased by 3,260 million yen compared to the end of the previous fiscal year to 69,581 million yen due to an increase in commercial paper, and a decrease in accrued bonuses and other liabilities. Net assets increased 1,343 million yen from the end of the previous fiscal year to 42,612 million yen, mainly due to increases in retained earnings. That is all about an overview of financial results. Thank you.